Welcome back. Let's talk about V2 Retail. That's the stock on our radar right now. Remember, over the last 12 months, the stock has surged over 400%, or a 5x return is what we've seen, notwithstanding the muted performance in the stock market that we're seeing right now. Last 12 months, there you have it, nearly 400%. The company has reported a good set of the third quarter business update as well, where the revenue surged 58%, same-store sales growth of 25% as well, much higher than what they've guided for the entire year. The first half was 36%, followed up with 25% in the third quarter as well, which is seasonally strong. Akash Agarwal, who's the whole-time director of the company, joins in now. Akash, thank you so much for joining in. First half, your revenue growth, if we add the third quarter performance to that, the implied 9-month performance is nearly 60% on the top line. If you could give us a sense on what you are expecting for this year on the top line, on SSSG and FY26, if you could give us a guidance as well.
Yeah, hi, thanks for having me. So I think we showed a growth of 59% in the first 9 months of the year. So we are expecting a similar revenue growth number in the coming quarters. And for FY26 as well, we want at least a 50% revenue growth. And when you talk about SSSG, then I think in Q4 of this year, we expect to do about 20 to 25% SSSG. And for next year, our target is a 15% SSSG.
Akash, good afternoon. Thank you for joining in. What are you targeting when it comes to the sales per square feet per month? Because when do you reach that targeted 1250 per square feet per year now? And how many of your stores are currently doing over that 1400 figure? If you could share some number on that.
So yeah, we were at 680 rupees per square feet per month 2 years back. And this year we're going to do upwards of 1000 rupees per square feet per month. And the target of 1200 rupees, I think we should achieve in the next 18 to 24 months. So even if we get an SSSG of above 10% for the next 2 years, we should reach that number. And talking about the number of stores that are above 1200 rupees per square feet, I would say about 45 stores are above that number already.
And what does that do to your margins? Because if revenue per square feet of the store increases with a similar cost, one would assume that the margins are going to be higher. But at the same time, you will have to invest in manpower and new store opening, operating expenses, etc. What does that do to your margins?
So when we move from 1000 rupees to 1200, the pre-Ind AS EBITDA margins should move from about 7% to 9.5%.
What about inventory days, Akash? You had earlier mentioned that you are expecting it to come down by 10 days over the next 2 years. What does the current figure stand at, and do you stick to this, that it will come down by 10 days?
So currently we maintain an inventory level of about 90 to 100 days, and our target is to get it down by 10 days in the next 12 months. So I think we would start seeing some sort of improvement in the inventory days from the next quarter onwards.
All right, because March 2024, your inventory days were at 155. So just wanted clarity on that. What does it stand at right now? 90 to 100 is what you're saying.
So because it's a cyclical business, you have to look at the inventory days, average inventory days of the 4 quarters. So usually the third quarter is the highest revenue quarter, whereas the fourth quarter is a little muted. That is why you see a huge change in inventory days. So when you look at the average inventory days of the 4 quarters, it's around 90 to 100 days.
Right. Let's talk about things that concern shareholders. I'm looking at a couple of data points here, and that tells you that for a company that has seen such phenomenal returns, over 5,000 crore in market cap, such bright prospects, like you're talking about 50% plus sort of revenue growth, there is not major institutional shareholding. I mean, it was just 2 quarters ago that you had, Motilal Oswal buy about 4.88% stake in the company. Why is it that institutions haven't, taken some of the stock? Because on the other side, the people who are buying the stock, the number of public shareholders from last December to now have increased from 16,000 to close to around 27,000. The street would get a lot more confidence if major funds, etc., who are bullish on the retail space, participate in your stock as well. Why is it that that's not happened?
So we want to focus on our performance, and we want to focus on the good numbers that we've been delivering. We don't know the complete thought process that goes behind these institutions and, getting into a stock. But we have seen a lot of interest from a lot of institutions, and we have been in touch with a lot of them. But I think it also depends on the overall macro picture, the overall state of the market. So I think, we just have to focus on performing as well as we have been performing. And I think it should convert in the near future.
Just to finish that point, Akash, have you met any institutions in the recent past? If you could shed some light on that. And part two of my question is, what is the what are the cash on the books currently, and what is the operating cash flow that you are currently generating?
So we do an investor conference every quarter. So we held a conference, I think, 2 months back, and we met about 30 to 40 different kind of investors, and we saw a lot of interest also. And talking about cash flows, the growth that I'm talking about, and the 100 stores that we want to add in the next financial year, we've already added 48 stores this year, and in the 3 months that are left, we're going to add another 25. So that's about 125 more stores in the next 14 months. So that will all be funded through internal accruals, and it will all be funded through the cash flows that we generate internally.
No, another concern, I'm looking at your annual report right now, and if you could give us some clarity on this. What proportion of the purchases you make are done from related parties? Because there's this entity called V2 Smart Manufacturing Private Limited. In FY24, purchase of traded goods against advance payments was close to 190 crores. The advance that you made for, purchase of traded goods was close to 206 crores. Again, the advance against purchase of traded goods was close to around 28.7 crores. So net, or rather gross value of close to 500 crores, which is almost as much as, your first half's revenue. If you could give us a sense on what your purchase policy from related parties is.
So it is a 100% wholly owned subsidiary of V2 Retail. So it has the 3 manufacturing units that we own. So about 20% of what we sell, we manufacture in our own manufacturing units. So that is the sales that you're talking about. So we save about 10% cost in those goods that we manufacture in our factories, and we pass on the complete benefit to the consumers. That is why we get such a competitive advantage in terms of price.
And no purchases made from unlisted, unwholly owned subsidiaries which are still perhaps owned by related parties? There is none of that?
No.
So do you expect that number to remain as it is right now, Akash, or do you see an increase in that number?
No, that number will decrease because we are not opening any more manufacturing units. And as our volume increases, the capacity remains constant. So basically that 20% will come down to 15%, and next year I think should be less than 10%.
Right. Just a final question before we let you go. You did say that there would be rising contribution of in-house designing and private labels. If you could give us what the number is right now and what you're targeting it to be. And you are getting 90% of your revenue from apparel. Over the last 2 years or so, what we've seen is also a big trend of large conglomerates doing value fashion and going into the same areas as you are. There is Zudio, there is U-Star, there are others as well who have come up with those value fashion options. How do you tackle this competition?
So India is a big enough market to have multiple big players operating in different price segments. So the models that you mentioned are at a slightly higher average selling price than us. So we operate at a 300 rupees average selling price level, whereas Youthstar and Zudios, the likes of them, operate at around 500 to 550. So it's a different class of customer, but in each price segment, there is enough space for 4 or 5 big national players to actually operate, because still more than like 75% is unorganized retail. So the shift from unorganized to organized has accelerated, and it will keep on happening in the next decade. So retail, especially value fashion retail, is poised to grow at more than 13-14% CAGR over the next 5 to 10 years.
Indeed, we leave it at that. Akash, thank you so much for joining in and sharing with us your views on the road ahead for the company. Wish you good luck for the quarters ahead as well. The management of V2 Retail, the stock currently trading 1% lower, but has been an outperformer over the last 12 months. Time to take a short break. The Nifty still remains 100 points higher. Continue our coverage of the markets on the other side. Stay tuned.